Introduction to Farm Accounts. Farm accounts and records. Recall from the Agricultural Economics unit earlier this term that the farm manager is responsible for deciding which crops to grow and quantity of each, obtaining the materials with which to grow them, the labor involved in all aspects of agriculture, and the marketing and transport of products to the consumer. How should the farm manager keep track of these responsibilities? Discuss. No matter how excellent a farmer's memory is, it is important to keep written documents of the various records and accounts related to the farm. There are two general types of written documents that must be accurately kept for successful farming. Farm records are written documents that review the daily activities of the farm. We'll learn more about these in the final year of your agricultural science course. Farm accounts are statements that detail financial transactions related to the farm's business. A financial transaction is the exchange of money for goods and services. Farmers participate in financial transactions when they pay or receive money in return for goods or services. Importance of farm accounts. There are many reasons why farm accounts are important. The most important reason to keep accurate farm accounts is to determine the financial health of the farm. Financial health indicates if the farm is operating at a profit or a loss, and if it has the adequate cash flow to sustain its operations. This information is helpful for the farmer, the farm, business partners, and any future financial investments. Alongside financial health, farm accounts can help a farmer to monitor changes in the prices of commodities, products, and services that can be exchanged for similar products and services. Understanding price changes can ensure that the farmer is accurately pricing their products and obtaining the best prices for any purchases. Price monitoring is also helpful in creating the farm plan and farm schedule, as the prices may impact the crops and amounts planted. Keeping farm accounts helps the farmer to determine profit, the amount of money earned after costs. Recall from the last unit that revenue, the total amount earned, must be greater than the costs of inputs in order to make a profit, or excess funds from sale. Profit equals revenue minus costs of production. As with any business, sometimes a farmer encounters theft of items, overcharging, or misrepresentation of item quantity or quality. Keeping accurate farm accounts can help identify fraud or theft. Farm accounts and records are almost always required in applications for loans or other financial services. The organization that manages the loans wants to know that the loan money can be returned with interest. Farm accounts can demonstrate this potential. Farm accounts suggest good business practices, which is necessary for loans and other financial services. The account information, including total worth of the farm and enterprises, can indicate that the farm is financially healthy and worthy of investment. This information is also used if a business is to be bought or sold. Since farm accounts identify the money earned by the farm, they should be used to determine annual taxes. You may have local, state, and federal taxes. Keeping accurate accounts will help you plan ahead for tax payments and to include these payments in your farm plan and budget. These accounts can also be used if you wish or are required to examine the finances of your farm. Farm accounts allow the farmer to determine the total worth of the farm. This information is important for taxes, needed for insurance plans, and helpful when planning for the future. Farm accounts offer the farmer or farm manager a great deal of information about how the farm runs. Farmers should use that information to make decisions. This knowledge can be beneficial for comparison from year to year in planning for the farm's future. Farm accounts can be used to measure and compare farm and management efficiency. The information gained from reviewing farm accounts can be used to determine and compare how the farm and farm management are working. To measure and compare farm accounts and efficiency, the information should be examined and questions answered. For instance, was the cost of mechanical farm equipment worth the price? Did the quantity of product increase after the equipment is introduced? How did the cassava crop yield this year compared to last year's crop? You can use farm accounts to track information and compare crops and revenue from year to year. This information can also be used to estimate future farm returns. Comparing this information gives you the farm's rate of return, the percentage of money that can be expected after investment. This information should be used to estimate potential returns. To calculate the return on revenue, take the amount of net income and divide it by the revenue. Finally, multiply by 100 to get a percentage. Net income is the money earned after all costs of production are paid. Return on revenue equals net income divided by revenue times 100. The information obtained through farm accounts can be used to evaluate the success or failure of a new scheme or enterprise. Enterprises to be evaluated could include a new method of marketing, additional mechanization, the introduction of a new crop, or use of a new agrochemical. The information derived from farm accounts can also be used to conduct research on your farm. For example, does the crop grow better with one fertilizer or another? Is this pest control method more effective, or is it that one? This information can then be incorporated into the farm plan. Finally, farm accounts and records can be used to monitor the health of crops or livestock. This information is helpful when caring for those products. It can also be used to plan ahead for the farm. To review, reasons to keep farm accounts and records include to determine the financial health of the farm, to monitor changes in product prices, to determine profit, to identify fraud or theft, to obtain loans, financial supports, or in transfer of a business, to determine annual taxes, and to determine the total worth of the farm. Further reasons to keep farm accounts and records include to use account information to make decisions, to measure and compare farm and management efficiency, to estimate future farm returns, to evaluate the way an enterprise is performing, to use the information to conduct research, and to monitor health of crops or livestock.